The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, we started out Tuesday's trade fairly quiet, fairly mixed, but by the end of it, we were lower across the board for the most part, led by soybeans, corn as well. Wheat was mixed to lower on the day. Livestock was lower. It just turned out to be a pretty rough day overall across the market trade. We're going to talk about it. We're going to look big picture at things. Joining us here today, Jim McCormick with agmarket.net is back on Market Talk. Jim, always great to talk with you, my friend. How are you?
Good afternoon. I'm doing well, getting ready for the heat to build here in Chicago. Like a lot of people, Jesse, kind of interesting. They're projecting us to hit 100 degrees either tomorrow or Thursday. And the last time, interesting enough, Chicago hit 100 degrees, they were saying, was the drought year of 2012 on July 6th. So it's, hitting 100 in Chicago is kind of rare, and to hit it in August is definitely kind of a rarefied air.
Yeah, I tell you what, just this heat this week is really unbearable for a lot of folks. Yeah, I think about, back when we had all the pit trading too, if it hit 100 in Chicago, what would that do to the markets, Jim? With all that heat, it would definitely have an influence when you had everyone there at the CME exchange. But nowadays, well, we got all sorts of weather models and everything else to look at things from our offices across the country, don't we, Jim?
Exactly. You don't get the weather play. I think that's part of the problem we had today. The markets definitely were definitely took it on the chin. It's we opened higher, I think, Sunday night on that heat, and they got the big pro forma crop tour, and we just didn't get any follow through. And I guess if they weren't going to buy the heat Monday morning, they saw no reason to buy the heat on a Tuesday, even though the heat is ramping up. And we do have some clients that are definitely a little bit concerned that this heat, especially some of the drier areas, we're going to take the top end off this corn crop and bean crop potentially.
Yeah, that's a great point, and that's something that I was going to ask about, and I'm glad you brought it up. I mean, soybeans more so, I think, than corn. We always see the old adage, beans are made in August, and you get temperatures this hot, and the very limited agronomy background that I have, mainly from talking to other folks, is, we're pretty much just going to abort at this point. We'll stop setting pods and really just kind of stop growing in these hot temperatures. And then the same with corn, kind of slowing down the ear lengths there. So it's something that I think is a question, but to your point, the market kind of ignored it on Tuesday and just traded lower. It felt like in beans, especially, we just gave back a lot of what we've seen in that market. Hard to say, Jim. It just felt like a very weird, very odd trading day in the grains.
Well, right now, I guess if you're going to try to pin it on the market right now, I think we're definitely losing bushels. History would argue you're going to lose bushels. The heat's going to back off in a couple of days, but there's still not a lot of rain. I mean, you say, but obviously, if the market's going down and the market is talking about technically a smaller supply due to lost bushels, it tells you the demand is moving to the forefront as a problem. And I guess that's probably the bigger story at the moment. If you look at corn's trading right down near the contract lows. Demand for corn has been just abysmal, especially on the export side. The bean demand's been a little bit better. We're still a couple dollars off the low in the beans, but even maybe you're seeing a little bit of bean demand fears coming in because of what the news is coming out of China. China's had a lot of economic news. Some real estate companies are declaring bankruptcy. And, unfortunately, the commodity market tends to be driven by China. China, if their economy is expanding and their economy is running at full speed, they're importing goods, they're consuming more goods. Right now, with their economy contracting, they're actually worried about deflation, not inflation like we're facing here. And if you get that, you don't need the meat, you don't need the beans for the meal potentially. And that seemed to maybe be what moved to the forefront of the trade's mind today is fear of demand as opposed to fear of losing supply.
Well, and thinking about that demand picture, you hit the nail on the head there, Jim. I mean, demand for U.S. commodities is tough right now, and it's something that I know a lot of folks are kind of whistling by the graveyard, so to speak. But demand's a real problem here. As we enter, especially a pretty key time window where we start to see U.S. soybean shipments pick up. It's really tough out there right now when it comes to finding someone that wants to buy U.S. ag products at these prices.
Well, that's it. We have seen some Mexico do some buying of the corn. We have seen Brazil, or excuse me, the Chinese buy some U.S. beans, but it's not essentially they're not buying above and beyond what the trade is thinking to get people excited about it. And you're right. This is a huge problem potentially because of the demand. What we're dealing is just a lot of competition from around the world on the corn, specifically from Brazil. Brazil has pretty much taken a big share of our Chinese corn demand that we normally would expect. China's actually had the headlines are quite a bit of production problems potentially. They've dealt with a lot of flooding issues. They've dealt with disease issues, but we really don't know how bad is. But one thing we do know at the moment, if it is bad and they do need to replace those stocks, they're not at this point replacing them with U.S. stocks. They're replacing with Brazilian stocks. So I think the key for the market to help put a bottom in, Jesse's going to see maybe China step in and buy a little U.S. corn, but obviously the price isn't there yet because they're not buying.
Well, looking at corn and beans specifically, and I know it's a tale of two different stories there when you think about the tighter balance sheet in beans, but overall, farmers, if they're looking at things, they have somewhat of an idea of what they have at the field. I mean, I know it's tough to price what's not in the bin, but at the same time, trying to protect some of your downside risk here has to be so important right now for your operation, Jim, isn't it?
It's getting really tricky now. I mean, because you're looking where the crop insurance is. A lot of crop insurance numbers are starting to kick in. I mean, it's a situation, Jesse, that, I know what you're talking about, the downside, but you get to the point of the market does work a little bit weaker over the next couple of weeks. You're going to almost be a producer thinking about, I need to be long, maybe some options as a way to potentially hedge off. You're essentially locking in that insurance premium you're going to check you may collect if the prices just stay lower in October. If they start firming up in October, your revenue guarantee is actually going to move against you potentially. So it's an interesting situation dynamic we're in. I mean, the corn, I'm a little bit concerned about the corn demand right now and the overall pricing. We're looking at stocks use around 15%. If you look historically, when we have stocks use 14, 15%, you don't have to go back that far. 2013 through 2018, that 5-year span, stocks use at the end of the year were right around 12.5%. All 5 of those years, Jesse, the average farm price is right around $3.50 plus or minus maybe 20, 25 cents. Now you got corn trading here today, where it's at today, right around $5. It becomes, when you look at the economic modeling, it can be very negative if the crop ends up being better than what the trade's pricing in at the moment and the demand doesn't come in, because that's the market's goal. The market's goal, essentially, if we're not getting sales, is to drive the price low enough to stimulate that demand. The $1 million question is, where does that demand come in?
All right. Well, you brought it up, so I'll ask the flip side of that question. What if someone has already done a substantial amount of forward marketing earlier in the year, and they are looking up against maybe not having the crop or hitting some of those insurance, barriers, numbers, however you want to put it? I mean, what do they do in that situation? Do they have any options to kind of work themselves through this situation, Jim?
Well, right now, I mean, it just kind of depends on your where you think the market's going to be. If you're nervous, we're losing crop and we're trying to put a fall low in early. I mean, that's going to be the argument a lot of people. Is this going to be an early fall low or a late fall low? And if you're worried about the upward potential, that's where you might look at using some options. You don't have to go all the way out to December options. You can use weekly options. You can use serial options. So there's a lot of way to kind of protect that upside or downside by using puts if you want to try to protect it. Right now, it's kind of a very tough situation because the reality is we know pro farmers out there looking at the fields right now, but this is going to be one of those years. I think it's really going to, especially with this late round of heat and dryness, it may not, we may not actually, sorry for the confusion, but we may not know the size of this crop until we actually harvest it. And, then we'll see how this market reacts. I mean, test weight could become a huge problem for this corn market as we just, we like the warm days and cool nights, not hot days and hot nights. That's not what you want to add test weight. So I think this crop size is still up for debate.
That's a great point now, Jim. And, it brings back the old saying, we don't necessarily know exactly what we have until it's in the bin. And that's something I think we got to remember here, especially a year like this. We're talking with Jim McCormick from agmarket.net for market analysis here today. Jim, overall as well, obviously we got the weather concerns out there. We're still watching various world events and outside markets. I know the Russia-Ukraine situation, that seemingly, it doesn't matter what headline comes out of there, it feels like. It just doesn't impact the wheat market right now, Jim.
Right now, it does not. I mean, there's two things in the wheat market, Jesse, we need to kind of keep an eye on. The first, like you said, is what's going on in Ukraine right now. In my opinion, they are ratcheting up, the counter punches. The Ukrainians are hitting deeper into Russia, bombing bases and all that. So, this could flip on a dime. But right now, I would argue they're definitely taking a glass half full type of viewpoint. The European Union is talking about subsidizing getting the grain out of Ukraine. Ukrainians have tried to get their own little grain corridor to get some ships out. They got essentially a freighter ship out, but they haven't shipped any grain ships out. They're working with Lloyd's of London to try to get some of these ships insured. Now, we'll see if the shippers really want to go actually into a war zone to pick that up, since Russia has essentially said they're fair targets going into the Ukraine. But, at this point, I guess I would argue the way the market's reacting is the market's assuming that these different scenarios are going to work and they're going to get the wheat out and they're going to get the corn crop out. If for some reason something changes on a dime, a ship gets sunk, and all of a sudden this market gets fearful that this grain isn't going to come out, you could see it change in a heartbeat. Because the other thing we're looking at going on is in India. India is having all sorts of food production problems. They've stopped exporting rice. That's driven rice up to 12-year highs. Now, India traditionally is not an exporter, or exports a little bit of wheat, but they're self-sufficient. They've had a shorter wheat crop. They're talking about buying 3 to 4 million metric tons of wheat from Russia just to make up the shortfall. But they've got an election coming in, so they're talking about importing up to 9 million metric tons of wheat as a way to drive down prices to try to keep food inflations down on the election side of the equation. Well, the reality is that's 9 million metric tons of wheat that somebody else that would normally buy from the Russians aren't going to be able to buy from. So that could change it, because when you look at the overall exportable supply of wheat, according to the USDA's last numbers, the countries that export it, their supply is at 10-year lows. So we're not going to run out just yet. But if you continue to compound the problems, we're in El Nino. Australia tends to have poorer crops in El Nino years. So the wheat market could change on the dime. But right now, you're right. The market is not concerned about it. But like I said, they could concern a lot. China's production, like I said, as mentioned earlier, they've got some production issues. China doesn't telegraph what kind of production issues they have. But if it's worse than what we think, they could swoop in, buy a couple million metric tons of grain and one overnight purchase, and it'll change the whole dynamic of the market. So something you need to keep an eye on. And that's, you're making that point. If you sold a lot of grain, you might consider buying some calls just in case the Ukrainian heats up, or, China comes in and surprises the world and comes in and has to buy U.S. corn.
No, great thoughts. I appreciate the insight there on that. Overall, outside market stuff. I know we got the Jackson Hole, Wyoming symposium this week going on, and all the meeting of the minds, so to speak. Anything you're really concerned about with that meeting going on that could drive the outside markets and in turn drive grains and livestock here this week, Jim? Anything at all?
Well, I think you got to keep an eye on what Powell's thinking. I think, I don't think he's going to say, I think for the most part, the consensus is going to be, we're going to keep the interest rates right about where they're at. Yeah. I think the idea that we're going to cut interest rates anytime soon is, at this point, there's no reason to, when you look at the jobs numbers and what's going on in the economy at this point in time. That is going to make it more expensive for producers to refinance loans and operating notes this upcoming year. It's also, remember, it's going to cost you more money when you calculate on-farm and off-farm storage. So it's something you need to take that into calculations. We haven't had to do that for quite some time. So storing grain, there isn't a cost of storing grain now compared to at least recent history. The one thing I am kind of a little bit concerned about, though, not past the Jackson Hole meeting, is this new student loan debt forgiveness that has been on since the pandemic is ending. The average, I saw one stat said the average student loan payer is owning about $400 a month now. Well, if you got a married couple that met in college, theoretically, that may be $800, $900, $1,000 a month that they weren't paying back on the student loan. And more than likely, they're being Americans, they were spending that $1,000 on something else, either vacation, food, going out to eat. We don't know what they were doing with the money, but the reality is starting next month, they no longer have that money, which might have been flowing into the economy one way, is now just going to be flowing back to the banks on the student debt and that repayment. And that could have a negative impact, especially on the protein market, as people tend to go out to eat with that money and order a steak. They may not be going out to eat as much. So I think that could that could have an overall drag on the economy, not just in the grains, but just everything in general. If people you sap that income or that money out of the system.
Over in the livestock trade on Tuesday, cattle and hogs were both lower on the day. Jim, I know in the case of the cattle market, we had that cattle on feed report Friday. It felt pretty friendly, but then market kind of faded through Monday and we pushed lower Tuesday. Hogs, maybe a bit of a correction there from some strength at the end of last week. What's your take in the protein sector overall today?
Right now, a little bit risk off, just like the grains, a little bit risk off. I think a lot of it has to do with that headline out of China. Like I said, people are worried about China's economy slowing down. China, the headlines are they're not going to import as much protein as people had thought, at least some of the headlines I'm reading. And then lastly, like I said, with this student debt repayment coming in, I think there's a little bit just overall concern for the market near term.
Well, great thoughts, Jim. Before we let you go, anything final you want to share, anything we haven't touched on today that you want to make sure we mention or reiterate today?
Right now, I mean, that's just, I wish all the people out there doing the Pro Farmer Tour, going out there, looking at those crops. We appreciate it. I'd be honest, Jesse, I'm glad I'm not that one walking out in 100-degree cornfields, 115-degree heat index. So we appreciate the work out there, and we'll see what's out there. I mean, this is this is a time of year people tend to get complacent about the marketing, and I understand that. But I'm going to encourage people to don't get complacent. There could be a lot of volatility depending on what we find with this crop, as well as what's going on in the world. So, put your open orders in to sell rallies if you like. If your goal is to sell rallies, get those orders working, plain and simple.
Well, Jim, if folks need a little help, a little advice to keep themselves from getting complacent this time of year, I know they could reach out to you and the team there at agmarket.net. You guys have a lot of great resources available, a lot of ways to get in touch. How can they reach you, Jim?
Agmarket.net's our website, as well as just call the 844-424-6758. And any of the Ag Market team members would be happy to help you.
Fantastic. Jim McCormick, agmarket.net. Always great to talk with you, sir. Have an awesome week. Stay cool, and we'll talk to you again soon.
Thanks for having me on.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.